Hello everyone, this is Jennifer. So we are moving on to the next sum in this video, which is prepare a fund flow statement from the balance sheet of AP Limited. Under that we have the equity share capital. The last date is 2008 you have 2 lakhs and 2009 you have 3 lakhs. It is an increase, so which we assume it to be there is a issue of equity shares, so which will go in your fund flow statement or the statement of sources and application of funds. Second is your share premium, which is 10,000. It is also a part of the share capital, so it will go in your fund flow statement as 10,000, which is a increase. So this both the equity share capital and the share premium will be shown under the sources of funds, as it is a increase. 8% debentures, last year it is 1 lakh, the current year it is 50,000. So there is a reduction, which means to tell the debentures have been redeemed. Okay, so that will be shown under the application of funds. The next one, general reserve, last year it is 50,000, the current year it is 80,000, which will be shown in your transfer to general reserve in your profit and loss adjustment account. Have the profit and loss amount given, open 50,000 and 70,000. 50,000 is your opening balance and 70,000 is your closing balance, which basically will be put up in your profit and loss adjustment account. Next, provision for taxation, 30,000, 40,000. We do not have any adjustment regarding to provision for taxation, so we will consider it to be a current liability. Proposed dividend also we do not have any adjustment, so we can consider it to be a current liability. Creditors is your current liability, which will be shown in your schedule of changes in working capital. Next we will move on to the asset side, which is plant and machinery. Plant and machinery, last year it is 2 lakhs, the current year it is 3 lakhs, so which we assume the plant and machinery has increased, so there is a purchases which will be shown in your ledger accounts and in your fund flow statement respectively. Land and building, last year it is 50,000, the current year it is 1,10,000. Again it's increased, there is some purchases made by the company, hence it will be shown in your ledger accounts and in your fund flow statement respectively. Investment, you have 10,000 last year and the current year it is 50,000. The investment has been increased, and there is an adjustment which is given in as investment costing rupees 8,000 was sold for rupees 15,000, the profit being credited to profit and loss account. So basically we will prepare an investment account and we will credit down the profit made from these sales, and we will take down the respective amounts to the investment account. Next is stock, 80,000, 60,000, which will be taken in your schedule of changes in working capital. Debtors is your current asset, schedule of changes in working capital. Bank is your current asset, schedule of changes in working capital. Investment costing rupees 8,000 was sold for rupees 15,000, the profit being credited to profit and loss account. The value of the investment at the time of sales is 8,000. but it was sold for 15,000. So 15,000 minus 8,000, you get 7,000, which is nothing but your profit on sale. So that is being credited to your profit and loss account as profit on sales. Next adjustment, an interim dividend of rupees 20,000 was paid during the year. An interim dividend of rupees 20,000 was paid during the year, so it will be shown in your profit and loss adjustment account as to interim dividend paid, and in your fund flow statement as application of funds. Next is your accumulated depreciation on land and building. They have given for the year 2007 30,000, and for the year 2008 40,000, and plant and machinery for the year 2007 40,000, and for the year 2008 it is 60,000. So since they have given the accumulated depreciation amount, accumulated depreciation is nothing but it is a total amount of the company that it depreciates as assets basically, whereas depreciation is the amount of a company's asset which are depreciated for a single period, whereas this is for the accumulated period or for a cumulative period, accumulated depreciation. So since they have given for land and building and plant and machinery, we will prepare an accumulated depreciation account both for land and building and plant and machinery account. Next adjustment, debentures were redeemed at par. They have given the profit and loss account, which is 50,000. You add your profit for the current year, which is 40,000. You get the total balance to be 90,000, less interim dividend paid, which is 20,000. Your profit and loss for the year after payment of dividend is 70,000. So which is balancing here with your profit and loss account 50,000 and 17,000. Debentures were redeemed at par, so 50,000 amount of debentures is redeemed at 50,000. So we'll move on to the solution part. So starting out with the schedule of changes in working capital, we start with current asset. Under that, the current assets that we have in the questions is stock, debtors and bank. There is the stock is a current asset. When current asset increases, your working capital increases. When current asset decreases, your working capital decreases. Stock last year 80,000, the current year 60,000, so there is a decrease, hence your working capital also decreases. So 80,000 minus 60,000, which you get 20,000. Debtors last year it is 90,000, the current year it is 80,000, so again it's a decrease, hence it will be shown in your decrease column. 90,000 minus 80,000, which will get 10,000. Bank last year it is 70,000, the current year it is 50,000, so hence it is a decrease. Again it will be shown in your decrease column, because when your current asset decreases, your working capital also decreases. Now the total of your current asset $2,40,000, and for the current year it is 1,90,000. Now we'll move ahead with the current liabilities. So your current liabilities, under current liabilities, the current liabilities which we have in the question is provision for taxation, proposed dividend and creditors. So your provision for taxation for the last year it is 30,000, the current year it is 40,000. So your current liability, when the current liability increases, your working capital decreases. When the current liability decreases, your working capital increases. So the current liability is increased, so you will show it up in your decrease column. The amount is 40,000 minus 30,000. And proposed dividend last year it is 20,000, the current year it is 30,000. Again it is increased, again you will show it up in your decrease column. 30,000 minus 20,000. Next is your creditors. Last year it is 50,000, the current year it is 70,000. So 70,000 minus 50,000, you get 20,000. So the total of your current liability $1,00,000 for the previous year, and for the current year it is 1,40,000. Now the total of the changes in working capital is in the increase column you do not have anything, it's a zero figure. In the decrease column you have 90,000. Now we will calculate the working capital. working capital is equal to current assets minus current liabilities. So your current asset is 2,40,000 minus 1 lakh, which you will get 1,40,000, and your current for the current year, your current assets minus current liability is 50,000. Now if you see the last year, the working capital is 1,40,000, the current year it is 50,000, so which basically shows there is an increase in the working capital, so which is equal to 1,40,000 minus 50,000, which is equal to 90,000. So this 90,000 will be put up in your increase column because it's an increase. So 90,000 it is a decrease, and it will be put up in your increase column. It is a decrease in working capital because last year it is 1,40,000, the current year it is 50,000, so there is a decrease of 90,000, which you will put up in your increase column in order to balance with your decrease column. So now the total is 2,30,000 1,40,000 is your total. 50,000 plus 90,000, 1,40,000 is the total for the current year. Therefore, the sum for the increase column is 90,000, and the sum for the decrease column is 90,000. So working capital is basically Working capital is basically 1,40,000 for the previous year. Current year it is 50,000. There is a decrease in working capital because last year it is 1,40,000, current year it is 50, so there is a decrease of 90,000, which you will put it up in your current year. So 50,000 plus 90,000, you will get 1,40,000, which is equal to your previous year. So this 90,000 is nothing but the decrease in working capital, which will also be shown in your increase in changes in working capital. So the previous year and the current year total will balance, and the changes in working capital, the increase amount and the decrease amount total will balance. So moving on to the next part of the question, which is the plant and machinery account. So if you see the plant and machinery account, we have the plant and machinery account, and we have the accumulated depreciation given. Plant and machinery account 2 lakhs, and the current year it is 3 lakhs. Plant and machinery account is an asset account, so you will have a debit balance to balance brought down 2,40,000 by balance carried down 3 lakhs. And 3,60,000. So basically, how do we get this amount? 2,40,000 and 3,60,000. So if you see, the balance brought down is 2 lakhs, and the balance carried down is 3 lakhs. So for the current year, the plant and machinery accumulated depreciation for the previous year it is 40,000 and for the current year it is 60,000. So you will add it up and write in your balancing figure. So it will be 2 lakhs plus 40,000, which is your accumulated depreciation, which you will get 2,40,000. And the balancing figure for the closing balance is 3 lakhs plus your accumulated depreciation of 60,000, which you will get 3,60,000. So you will add up your depreciation amount and you will put that as your opening and closing balance. Only when the accumulated depreciation is given, you will add it up in your opening and closing balance respectively. So next, if you see accumulated depreciation is added and put it up, so nothing else is given about plant and machinery account. So we will move ahead with the balancing figure. So you have a credit balance which tells to bank account, which we will consider it to be the purchases. If there is a debit balance, it is purchases. If it's a credit balance, it is sales. Here is a debit balance, so it is considered to be purchases. The balancing figure is 3,60,000 minus 2,40,000, which is 1,20,000. So your total of your plant and machinery account gets balanced. So if it's a debit balance, it is considered to be a purchases. If it's a credit balance, it is considered to be a sales. If it is purchases, it will go under your application of funds because there is outflow of funds. If it is sales, it will go under your sources of funds because it is inflow of funds. Now moving on to the next account, which is land and building account. So in your land and building account, your opening balance is 50,000, your closing balance is 1,10,000. So you have your accumulated depreciation to be 30,000 and you have your accumulated depreciation for the next year to be 40,000. So you will add your opening balance with the accumulated depreciation for the previous year and you will add your closing balance with the accumulated depreciation of the current year. So two balance brought down, it's a debit credit balance, it's a debit balance, two balance brought down. The amount is 50,000 plus 30,000 accumulated depreciation. So 50,000 plus 30,000, which is 80,000. By balance carried down, your closing balance 1,10,000 plus your accumulated depreciation is 40,000. So 1,10,000 plus 40,000, which is equal to 1,50,000. Now if you see here also we have a debit balance, the balancing figure. So to bank account, which we'll consider it to be the purchases So it is 1,50,000 minus 80,000, which you will get 70,000 as your answer. So the total is 1,50,000. So this purchases will be taken up in your fund flow statement as applications of funds, and the purchase made in the plant and machinery also will be considered as application of funds in your fund flow statement. Moving on to the accumulated depreciation account. Accumulated depreciation account, you will have a credit balance, so it is by balance brought down. So if you see the opening balance of accumulated depreciation for land and building for the plant and machinery is 40,000 and the closing balance is 60,000. So by balance brought down 40,000 and to balance carried down. $60,000. So your balancing figure will be transferred to your profit and loss account. So by profit or loss account, which is your balancing figure, so which is 20,000. So your total is 60,000. So this balancing figure, which is 20,000, is for the current year, which will be transferred to your profit and loss adjustment account. So accumulated depreciation for land and building, here also it will be by balance brought down. The amount is, for the previous year it is 30,000, for the current year it is 40,000. So opening balance is 30,000, closing balance is 40,000. By balance brought down 30,000, to balance carried down. $40,000. So here also the balancing figure will be transferred to your profit and loss account by profit or loss account, which is nothing but your profit and loss adjustment account. It is basically shown as a depreciation for the asset for the current year. Depreciation for the current year. So how much is the balance? It is 10,000. So the total is 40,000. Now this will be taken in your profit and loss adjustment account as the depreciation amount, which will be debited. Next, moving on to the next account, which is the investment account. If you see the adjustment, we have something relating to the investment, which tells investment costing ₹8,000 was sold for ₹15,000, the profit being credited to profit and loss account. So the opening and closing balance of investment is 10,000 and 50,000 respectively. Investment also is an asset account, so it will have a debit balance to balance brought down, which is for 10,000 and 50,000 respectively. So opening balance is 10,000 Buy balance carried down. $50,000. So if you see in the question, they are telling the investment has been sold. So sales has been made. When sales has made, so it will be buy bank account because cash is coming into the business. So buy bank account, which is nothing but the sales. So the amount is 15,000. So the investment was sold for 15,000. So the sales proceed is 15,000, but the written down value is 8,000. So the sale proceeds is 15,000. So it is sold on a profit of 7,000. So to profit or loss account, which is profit on sale. If it is to profit or loss account or by profit or loss account, it will obviously be taken in your profit or loss adjustment account. So it is profit on sale, which is 5,000, 15,000 minus 8,000. So you will get the amount to be 7,000. So total of it, so you have 65,000. So to balance, to bank account, if it's a debit balance, it is considered to be purchases. So the balancing figure is 65,000 minus 17,000. So which you will get 48,000. So the total of your debit side is equal to the total of your credit side. So this will be taken in your profit and loss adjustment account and in your fund flow statement respectively. So moving on to the profit and loss adjustment account, we will start up with the balance brought down. Buy balance brought down, have the profit and loss account 50,000 opening balance and closing balance is 70,000. So 50,000 and to balance carried down, $70,000. Next, we have the general reserve given, which is 50,000 and 80,000. So to general reserve 30,000. To general reserve 80,000 minus 50,000, which is equal to 30,000. Next we have the adjustment, which wherein they have given an interim dividend of rupees 20,000 was paid during the year. So to interim dividend paid, $20,000. Next you have the accumulated depreciation. So this accumulated depreciation, we have created the ledger account. So we'll look into the ledgers and we'll take the respective amounts. So when we're coming back to the ledgers, we have the depreciation amount. So the depreciation amount for the current year is, so to accumulated depreciation on plant and machinery is 20,000. To accumulated depreciation on land and building is 10,000. So the corresponding entry will be placed up in your plant and profit and loss adjustment account. So to accumulated first we have the plant and machinery. So the plant and machinery amount is 20,000. How do we get it? From here, from your accumulated depreciation ledger account. So this is your current year depreciation, which we are calculating it for your profit and loss adjustment account. And for the land and building, the current year depreciation is 10,000. So land and building, next we will move on to our working schedule of changes in working capital. That has been done. So now we'll move on to the investment account, which tells there's a profit on sale of investment, which we have transferred it to the profit and loss adjustment account. How much is it transferred? 7,000. It's a profit on sale of investment. So any profit on sale of investments or assets or long-term assets, which will be transferred to your profit and loss adjustment account. So by profit on sale of investment, the amount is 7,000. Why we are basically transferring this 7,000 in your profit and loss adjustment account? Because they are clearly told the profit is being credited to your P&L account. Okay, so the profits that are being credited to your P&L account, this is a non-cash or a non-fund item profit which have been credited. Hence we are crediting it in order to reduce our profits and show our funds from operation or compute our funds from operation. So now we have taken all the amounts. So now we will total up our amount column, which we will get it to be 1,50,000. So your balancing figure 1,50,000 minus 57,000, which you will get 93,000, is nothing but by funds from operations, which is your balancing figure. So next we will move on to this funds from operation will be taken up in your fund flow statement as sources of funds. So now we will start out with the fund flow statement. So what all will come under sources of funds? So right from the question we will start it up. In your question you have your share capital and the share premium. So that will come under your source of fund because there is increase in share capital. So issue of share capital, the amount is 2 lakhs, 3 lakhs minus 2 lakhs, you get minus 2 lakhs, which you will get it to be 1 lakh as your issue of share capital. So the amount is 1 lakh. Next, your share premium, the last year it is a nil figure, in the current year it is 10,000. So your share premium is also a source of raising fund. Share premium amount is 10,000. Next you have your everything is being considered. Moving on to the debentures were redeemed at par. So debenture, how much do we have? Debentures is 1 lakh last year, the current year is 50,000, so it has been redeemed at par. So by redemption of debentures or 50,000. and we'll come up with the accounts, the various accounts that we have prepared right from the working capital. There is a decrease in the working capital, so decrease in working capital will be shown as sources of funds. So net decrease in working capital, your amount is 90,000. so this 90,000 will be shown in the sources of funds because the working capital requirements have been decreased, so it acts as a source of fund. Next, moving on to the profit and loss adjustment account, profit wherein funds from operation is 93,000, which will again be shown as sources of funds. So funds from operations 93,000, so the same amount itself we are showing it. Next, moving on to the plant and machinery account. So you have two bank accounts which we will consider to be purchases. So if there is a purchase of any long-term asset, there is an outflow of funds. If there is outflow of funds, it will be shown as application of funds. So purchase of plant and machinery, the amount is 1 lakh and your balancing figure is basically 1,20,000. 1,20,000. And in your land and building, again you have a purchases, which is the balancing figure. Again it will be shown as outflow of funds, hence it will be shown under application of funds. Purchase of land and building is 70,000. Next we have the investment account. So in investment account, basically we have two by bank account which is sales and two bank account which is purchases of investment. So the purchase of investment will come under your application of funds and sale of investment will come under your sources of funds. So sale of investment is 15,000. Sale of investment 15,000 and the purchase of investment 48,000. And also the other one that we are supposed to write is the interim dividend that is paid during the year. Interim dividend paid, which is given in your adjustment. Interim dividend paid, the amount is 20,000, which is given in your adjustment. So now let's total up and see if our fund flow statement tallies. So you have 3,08,000 to be the total of your sources, and your application is also 3,88,000. So by this our fund flow statement tallies, and we are moving ahead with the next problem.